on that conversation, we've got Sushovan Nayak joining in on the show right now. Sushovan, hi, morning. Great to have you on the show. What do we expect from TCS when it reports its numbers?
So, as you said, more or less you summarized it well. Effectively, this will be slightly flat to marginally positive revenues. 0.5 to 0.6% CC growth is what we're expecting, and margins to be marginally impacted by the wage hikes, because last quarter it was just 1 month of wage hike, and this quarter it will be for the complete quarter. So the margin should be slightly under pressure, but that is how it would be as far as TCS is concerned. And generally, if you look at Q3 and Q4 is when most of the deals start getting renewed and most of the customers take decisions as far as the new deals are concerned. So you'll see seasonally strong TCVs as far as TCS and most of the other large cap IT pack is concerned.
Sushovan, how do you look at client ramp-ups for the quarter? Means, do you see there is going to be some kind of momentum in the kind of order flows that's going to come in because of discretionary spends coming back?
So, basis discussions and channel checks with the companies, what we understand is whatever discretionary spend that is coming back, it's primarily in high tech to an extent and BFSI. BFSI, it has always been good. So that is where we see, as far as TCS is concerned, primarily the ramp ups, if they happen, would happen in the BSNL account. I think that is something that would see some ramp ups there, is what we understand.
Sushovan, the other one which will come out will be HCL Tech, and that's been the real outperformer, right, within the IT pack. Give us your assessment. What's led to that? And can that kind of performance continue, in your opinion?
Yeah, so HCL Tech, I think during Q1, what they had done is effectively they had said that some of these deals had gotten right shifted. And as a result of that, H2 is going to be better than H1. In Q3, what is going to happen as far as HCL is concerned is they have this seasonally strong HCL software business, right? So that is something that is going to aid their growth. Possibly, we expect somewhere around 2% constant currency growth for the company as such. And the margins, however, may come under pressure because of the wage hikes and to an extent the restructuring expenses. I think that is something that would put the margins under pressure. But HCL Tech has always grown better than the sector, and we believe that this will continue to be the case. When I say sector, the large caps as such, it will continue to be the case even this quarter is what we believe. And for us, the one which will grow the strongest would continue to be LTI Mindtree. In fact, Q4 is going to be better than Q3 given the deal ramp ups which are going to happen, right? So that is also something that is going to benefit LTI Mindtree in Q4.
Uh, Sushovan, if you can also give us a sense of the pressures which could be there in this quarter. Means, of course, we are there's a furlough. It's a furlough quarter, so things will be a little slower than usual. But when you look at these earnings which are coming in this week, at least all the 3 to 4 top IT companies' earnings, what are the metrics that the market should be watching closely, given the fact there is this AI and cloud conversation which is happening, how IT companies are going to move forward with respect to AI services. What are the metrics that you will be looking at closely?
So, if we look at the AI revenues, right? I mean, just to give you an example, HCL Tech was the only one which actually calculated that it was almost 3% of the revenues of almost $100 million. But if you look at what, let's say, the leader, if you look at it, Accenture, right? Accenture has always been disclosing those AI, Gen AI revenues, which was almost 5% of the revenues and 10% of the bookings. But if you see what Accenture is doing now is that going forward, they will not be disclosing their Gen AI revenues because they have said that Gen AI is infused into every deal that they are now getting into. So it would not make sense or it would not be fair to basically disclose the Gen AI revenues. I think that is, people were trying to mimic Accenture in a way, but now Accenture itself has come up with that. And the fact is that Gen AI is going to be infused in most of your deals as such, right? So that is something that is going to be true for even Indian IT, right? So I hope I've answered that question of yours.
Yeah, so Shovan, yeah, you have. Also, if you can give us a sense of what could be the impact of currency fluctuation in Q3, because that's something which would be a a tailwind for the Indian revenues for them, for most of the companies. And where do you see pressure coming in for the margins?
So if you look at it, the rupee has depreciated almost 2% versus the last quarter. So the ones which are more exposed to the US, having higher US geographic exposure, are the ones which will benefit from a rupee depreciation. So if you look at it, generally every 100 bips of rupee depreciation results in 30 to 40 bips positive impact as far as the margins are concerned, right? So that is something that is going to benefit the higher US exposed players. But what is going to happen is, if you look at some of the mid caps or even some of the large caps, let's take HCL Tech. Mid cap is someone like a Persistent or even a Coforge. Most of them are also going through their wage hike cycle. So as a result of that, that will get offset by the rupee depreciation, right? So we don't expect a material increase in the margins, but the large caps wherein the wage hikes have not come about, there we may just see some improvement. That's the way I would look at it.
Okay, understood. Sushovan, thank you so much for your time today. Great speaking with you.
Same here. Thank you so much.